Welcome to CEO Money TV. I'm Michael Yorba, your host. Thanks for joining us. All right, I've got Reginald Ringgold. He's a financial industry strategist and top fintech influencer. His company is Blockvest, decentralized exchange, blockvestico.io. Reggie, welcome to the show.
Glad to be back, Michael.
Glad you're here. All right, before we get started on Dodd-Frank Section 508, tell our audience what your company does and what separates you from anybody else in the world.
Well, we are a decentralized exchange that houses blockchain-based assets. We also have an index fund that is currently live now that concentrates on the top 30 cryptocurrencies weighted in market cap. Now, our exchange, the thing that's going to separate us from a lot of these other exchanges is we're decentralized. A lot of these exchanges you see are centralized in nature, which can cause issues in terms of security as far as cost as well. We also are creating the first OTC derivatives. These are products such as the S&P, gold or oil, or even your traditional foreign exchange currency pairs that will be settled in cryptocurrency. So imagine, Michael, being able to go in and trade the S&P with your cryptocurrency.
Yeah, that's going to be a huge improvement in regards to that once liquidity occurs, which I understand is moving in the right direction for you. Is that right?
Yeah. Liquidity is actually moving in the right direction, mainly because of some of the things that we've seen, as you were talking about with Dodd-Frank, opening up the floodgates, for unaccredited investors to have access to these digital assets. There's been a lot of noise going around in terms of digital assets and securities being, whether it's a security, a utility, let's face it, we talked about it earlier. It doesn't really matter what we call it. If you give it the Howey test, a lot of these things aren't considered securities. So what we've done is we've taken a front to make sure that we're established here in the United States. I don't know if you've recently seen in the news, but the chief strategy officer of Tether and Bitfinex, he's recently resigned. Now, if you ask me why he resigned, I would tell you it's surrounding some of the things that happened at the turn of this year, with the corruption that they were talking about in terms of the, the assets that were backing the Tether.
Right.
They, as a result, moved the company out of the United States. Now, with the CSO being a U.S. person and a U.S. citizen, in his statements, his words were, it doesn't make sense for him to still be affiliated or involved with the company, if they're no longer going to be operating on U.S. shores. So it brings me to this point. To any of you ICO issuers out there who think that you can maybe avoid having your ICO be scrutinized by the SEC or NFA or FINRA, you got another thing coming. There are a lot of people who may not even be from the United States who look to say we don't want to necessarily get regulated by these regulators, but if you think that your ICO is going to have participants that aren't from China, a Russia, or the United States or Europe, I mean, you really got another thing coming. So it's really best to try to establish a culture of compliance and establish, regulatory issues as they pertain to these jurisdictions.
I agree with you 100%. Now let's bring in the new Jobs Act or JCO crypto offerings.
So with the JCO crypto offering, it's a challenge. I mean, you think of it like this. With a lot of these again, ICO issuers, they don't think that it makes sense to go in and have their ICO regulated, with the SEC, mainly because the SEC has a 2-year statute of limitations, which means, they can create new regulation or laws and then come after you 2 years later, if they see that, your ICO was successful and you maybe have broken one of those different laws. Now, if you think about the current election, and they were talking about the Russians potentially rigging our election. Now that remains to be seen, and that's besides the point. But I say that to say this: the way that these programmers, hackers, have gotten very advanced these days, they're able to get into just about any ICO cabinet, and therefore participate in just about any ICO in the world. The KYC and AML requirements that are put into the different ICO cabinets, they're not robust or equipped enough to be able to do all the different scrutinizing of every single investor coming in. You'd have to check them, one by one with the fine-tooth comb. So I say that to say this: if even one participant from your ICO is from the United States, or Russia, then you're now a part of that jurisdiction. You're now subject to that jurisdiction. So it's best to be, at least regulated, because it's going to help you in this environment where a lot of these ICO investors, they aren't receiving a return on their investment, and they're not really too sure. They're leery. You also add the fact that the prices of the cryptocurrency are dropping. You definitely are going to need to operate with the culture of compliance and put yourself forward instead of having, the hood on with, the Satoshi Nakamoto kind of a culture that really worked then but doesn't work now.
Let's open that blockchain exchange commission conversation, because this is very appropriate to what you just said.
Well, blockchain exchange commission. Let me pull something up here. So, blockchain exchange commission is huge. We're looking to create a culture of compliance, right, where the different members are helping to vet different projects and to create a due diligence process to be able to look to see if a certain ICO issuer is regulated, or at least following up on the certain things that they said they were going to do, as well as holding them accountable. If you're familiar with certain forums like local Bitcoins, or even the Four, or take it a step further with American Idol, and we talk about self-regulation. Self-regulation can actually work. You have, for instance, eBay and Yelp, where we give these different ratings to people. We've seen it with Uber, right, and Lyft, where if someone is good and giving good service, they get good ratings, they get good stars. If not, you see it reflect in their ratings. So if we're able to have different ICO service providers that are policing ICO service providers, as well as different advisors and issuers and people in the community policing each other, it creates a culture that is kind of similar to what we see in the U.S. equities market, where you have the NFA, FINRA, and the CFTC that are regulating. I mean, the CFTC is there to regulate the institutions that operate in the commodities market. And then you've got the NFA, the National Futures Association, is there to regulate the individuals that are operating and dealing in commodities. So we need this to be able to police the issuers, because right now you can see that the current market and environment for digital assets, it's got a lot of things that need to be cleaned up, similar to the penny stock markets. The OTCQB markets, they're a good way to raise capital, but let's face it, there's a lot of pump and dump schemes that are out there, and they've been out there. So with this new Dodd-Frank and the changes to Section 508, improving access to capital is just that. It improves access to capital. Now, unaccredited investors have access to investments that they didn't otherwise have access to. And we can thank Trump for that. So what we've done with Blockvest is we decided to forego our pre-ICO, which is pretty much what everybody does. And we're going to do a pre-IPO, pre-initial public offering, testing the waters phase. We were initially in a private sale, expression of interest, which is a whitelist. And in our whitelist, it was exclusive. We were only accepting institutional investors and VCs, as well as accredited investors. And we scrutinized them, Michael, with a fine-tooth comb, because we were aware of the 2-year statute of limitations that the SEC imposes. And we want to bring return to our investors, but we want to make sure that the regulators were very close with them and we're following their guidelines. So what we've been able to do now with our Reg A approval and the JCO offering that we're doing is we're going in and we're offering it now to the world. We're going in and the coin, so that we don't dilute the token's price, we're not offering any discounts that were there before, but we are offering the coin and the token to the public as a whole. And we believe it's going to be very successful, because the requirements to list on a New York Stock Exchange or a NASDAQ are $30 million in market cap. If you can meet $30 million in market cap, we've already got certain members on our team, such as Jack J. Ben Simon, which is our Chief Compliance Officer. He's got all of the qualifications to be an OTC sponsor. And our investment bank, the Blockchain Investment Group, is going to underwrite the offering. And once we reach a $30 million market cap, which should be no problem with the launch of our ICO, we see next year, once the other half of the allocation of the total tokens that are to be allocated from the Blockvest decentralized exchange are freed from the smart contract, which they're currently being held in. We'll take 10 million of those tokens, lock them up, and then create a additional offering under a subsidiary where we take Blockchain Investment Group and we go public on a New York Stock Exchange or a NASDAQ. And this will create a lot of liquidity, Michael, for this market, because traditional investors will see the bridge and the ease going from, fiat, traditional securities and shares to tokens. There'll be different, securities, of course. The token will have a different price. That will be different, reflective of what the price will be in the equities market, but it will allow a lot more liquidity to come in because the money we get from our securities offering will be used to buy more blockchain-based assets.
Got it. Brilliant. All right, let's close with this. If there's anybody that you have that goes through your exchanges, all the ICOs that you're going to be doing, please go ahead and send them over here. I'd love to hear them because I know they've gone through you've gone through them with a fine-tooth comb and done every bit of due diligence you could possibly do to make sure that they're the right people to be on your exchange.
Correct. I mean, we're doing one thing and just make sure that they're regulated, at least regulated in their jurisdiction. You're going to be one of our premier marketing partners. And, the biggest thing is a lot of these coins, they don't even get listed on exchanges, mainly because they've been using the SAFT token offering. And let's face it, Michael, the SAFT is not liquid. Reg D is not liquid. So there's no reason for it to even be listed on an exchange because you can't sell it until after the time horizon as far as the restrictions from the SEC are lifted. So we're coming in with, again, this JCO, giving them a liquid security that they can then take and list on our exchange and be, exposed to, an array of clients through your, venue, CEO Money.
Got it. Great. Thank you, Reggie. We'll talk to you soon.
It's been a pleasure, Michael.
Mine too. You've been listening to CEO and watching CEO Money TV. Thanks for joining us. We'll be back with you with another unicorn right after these messages.